everybody. It's Brian Shannon from alphatrends.net. Today is Friday, the 13th of July, 2018. Hope you had a good week of trading. The markets did gain some ground here. After breaking some short-term resistance last week, we saw some nice follow-through this week. And the S&P 500 gained 1.5%. Nasdaq up at an all-time high with a gain of 2.3%. Russell lagged a little bit, as did oil, but generally speaking, it was a good week for equity. So let's take a look at the charts. The S&P 500, this is a 30-minute time frame here, and let's actually go to a daily time frame so we can get a better perspective. This is the band of resistance that this market has been up against a couple times this year, and as I pointed out on Twitter, it looks like this is developing what would be an inverted head and shoulders pattern. Now, most of the times you look at an inverted head and shoulders pattern as a reversal pattern, but they can act as continuation patterns as well. And if we were to look at a potential upside target based on this, we could take a very conservative measurement of 258 to 278 and say that we've got about 20 points of upside. I'm not going to be focused on that 20 points of upside, but it is interesting that it comes up to about 300. Instead, I want to maintain focus on the intermediate term trend. So let's just clear that off. Here's what we look like. This has been resistance in the past. There's no saying it will be once again. But this market this week we had constructive action in the market. The week started out, of course, after that breakout on Friday. We saw a gap higher. We pulled back and then found support right where we wanted to see the buyers show up. That is, with a rising 5-day moving average, we looked at this pullback as just a pullback. And then there was the volume weighted average price from where this move began, where the buyers showed up here this week. So next week, I think we want to continue to give the benefit of the doubt to the buyers as long as we remain above 276.50. We are a couple points above that, and if we were to pull back down in towards that area, I don't think it would be damaging to these trends. Instead, it would be just what would be most likely a normal pullback from a level where we've seen some supply before. And if that were to happen, we pull back, we would then look for, a pullback and then strength to the upside, which I think would be a nice upward movement. If instead it fails here, well, that's what we have stops for. The Nasdaq, as I mentioned, and as I'm sure you know, is at a new all-time high here once again today. We saw that the rising 50-day moving average found buyers 2 weeks ago, and then down to a 30-minute time frame. It's kind of the same story where the buyers regained control as we broke beyond this little area of resistance, and that was also where we saw the volume-weighted average price from this prior peak taken out definitively. This week, we saw the same thing that we saw in the S&P 500. That is, that where that move began, the strength a week ago, we saw buyers were ready and willing to buy the dip into the average price from the beginning of that move. And while it was, again, still above the rising 5-day moving average. While we're above a rising 5-day moving average, it doesn't make sense to sell short. That's one of the concepts I've been talking about for decades. The Russell 2000, this market, I think, it's stalled a little bit here, but it looks like it's ready to be able to continue from this point. And, right now we're just consolidating. If we can get above basically today's high somewhere in here, this is looking like, as I pointed out to subscribers, a cup and handle here on the Russell 2000. And if it can get beyond and hold above 168.50, then I think you've got the likelihood that the Russell 2000 does continue on to make new all-time highs. Semiconductors kind of a little bit skittish in here as they continue to really just kind of go back and forth between support and resistance and in a wide range. So I just don't see a big advantage to being involved in these semiconductors right here, right now. If we take a look at the 30-minute time frame, we found that this trend line off the recent peak did find sellers here. So that will be an important level for the market to regather its momentum back above. We do have a rising 5-day moving average. I think that overall you just have to look at it as mixed messages in this market, and you could say, well, it's making these higher lows, but these lower highs as well. Kind of similar to what someone had pointed out to me before, the fact that we had lower highs in the S&P 500. Well, now that pattern has broken because we broke above this little peak right here. But again, back to the semiconductors, it looks like you kind of got to just wait these things out until they digest these gains a little bit further. Unless you're short, really short-term intraday trading, I just don't see an advantage to being involved in these semiconductor stocks right now. And the financials, they survived, I think, what was a pretty good test this week. The financials, where are we? Here we go. Here's our financials, if it would switch for me. Anyways, from a momentum perspective on the daily time frame, I don't see any advantage to being involved in these. If you're a longer term trader trying to build a position, it seems as though this area did in fact hold its support once again, and now it's kind of back. It's still in this range, the midpoint of that range, coming up near that 50-day moving average near 2750. I just don't see the advantage to being long in here. And it'll take a couple days longer for these earnings to digest, the earnings reports to be digested by this market. And really from an intermediate term perspective, 27 and a quarter-ish is where we'd really like to see these things closing above, to see that we are in fact recovering in here and maybe able to make it towards the high end of the recent range we've been in.